how I plan out this £100,000 trade. Hi, it's Charlie giving you today's video. So let's take some context to start off with. These big picture view trades, I love these big thematic types of trades. So over the years, the big move down in 21 and 22 was a big overall thematic trade. The prior move up, I was on the long side through the majority of that, caught the top off of there for some of that, and then the market all went choppy through late 2018 and early 19, and actually had a drawdown during that period, but caught a large portion of this through as well through 2017. So overall, and caught that off the lows there. But then, of course, the euro chopped around through sort of from late 23 and through 24 really. So haven't caught anything through there because we haven't seen any extensions. Anyway, so overall, I love these big picture trades. Why? Because I think they're a great mental challenge. Holding on to trades is difficult for the majority, hence why I quite like doing it, because the majority don't want to do it for all their psychological reasons a lot of the time. And but it's still a good mental challenge for me too, to get into a trade when you've got all this news flow that's going on, from whether it's economic news, geopolitical news, whatever it might be. You've got to hold on through all of that and be building your position over time. We're going to be talking about that in just a second. So I love the big thematic trades, and those are the ones that do become those big six-figure type trades. So let's have a look at where we are right now, and let's map this out. So as it stands, just looking at the monthly chart first of all, the euro, let's just squeeze this down a little bit. So the euro made these lows. This was important. These lows here in 2015 to 17. Why? Because it was multiple tested, and then we came back through 2022. We then had essentially a big false break to the downside because we came marching back up, and there are reasons I'm not going to discuss all that just yet, but the reasons why. And so that was our false break to the downside. Then we just consolidated. We peaked in mid 2023, and then essentially from mid 23 through to August, September of 24. In the grand scheme of things, the euro ended up just staying within some form of range. Then we've just done this deep pullback into into December of last year, and actually into January of this year, and then come back up again. Anyway, so overall, I'm seeing this as okay. It's got a bit choppy in the last couple of years, but that happens. Overall happened back here. But if you got put off by that range, then I'd have missed out on all of that, wouldn't I? So anyway, overall, this still looks like it could be that this is still the false break. And of course, as a trader, we have to adapt. And I'm saying, as it stands, that's where we're at. Now, at the beginning of this year, it looked like we were going to be off for the races to the downside. But as it stands, that's not the case. This is quite a formidable bounce that we've had. And I'm not going to go into all the details as to why the markets have bounced. I've covered some of that off in the live broadcasts I've done. I've done 2 live broadcasts here on the channel. One was just a week or so ago, and then the one before that, a month before that. So do check out those. But of course, there are reasons why the euro has bounced so strongly in the past month or so, certainly after the German elections. Obviously, geopolitical events are having an impact there across the EU, and EU massively increasing defence spending, etc., etc., etc. So there are all those reasons. I'm not going through all of that right now. Essentially, from a technical perspective, the euro has reclaimed. In fact, it's reclaimed the entire drop post Trump's presidency win. So when he won the presidency, this was the day that he won. The dollar massively strengthened on the back of that, and we saw this lovely run to the downside. But the euro has taken all of that back. So anyway, we'll come back to the daily charts in just a moment. So overall, I'm just painting the picture at the moment that, of course, the euro could roll all the way back over. There are always threats to any given market, and as a trader, we have to be willing to adapt. And if the euro was to roll all the way back down on the back of tariff wars, then there will be a point where I would see it as, okay, this is just a mess to the upside. If that was the case and we gave back enough, and then we may well still be back on for the downside down here. As traders, we're dealing in probabilities, not certainties. So you have to be willing to adapt. This is where people get it really wrong. They're like, oh yeah, but you were wrong there. Who cares? If the market rolls back down, I'll then be on the short side. For now, I'm reading what's gone on with the price action. So what we can take from the price action thus far is that when the tariff threats started, we had these massive gaps down, but we couldn't follow through. Massive gap down, reversal. Then we did another gap down a week later, and then a reversal to the upside. So was that a sign that the market just doesn't want to go down on these tariff threats? Now, they were threats at that point. We're finally here at tariff wars coming into next week. So we'll see whether the euro and the other currencies materially come down on the back of that. Let's see. So at the moment, we didn't push to new lows down there. Plus, subsequently, we've had what's going on in Europe. It's a bit of a wake-up call to Europe. And there are all sorts of other counter-arguments as to what's going on with the US at the moment with regards to tariff wars. So, my point is this big picture here. So, the false break that we've got on the big picture to the downside, I'm actually going to take this out to a quarterly chart. Am I? Yeah, just briefly. That we could be on for a mean reversion here. So, this entire move here that we had the lows here in 2015 to 17, came down to the new lows in 2022, but it wasn't sustained. Is this entirely just a big false break here, and actually we're going to do some mean reversion? Mean reversion could well mean that we end up back at an absolute minimum for the euro dollar, back up at the 50 here, which is the on this quarterly chart, a 50 period moving average on the quarterly, and potentially even beyond that. Now that is currently in around the 115 mark. So as a mean reversion play. Now so I've got 115 as a potential mean reversion. Right, now let's take this down to the daily charts. And what I'm going to do is just squeeze all this up so I can bring this down so we can see 115. Okay. Right. How do I go about creating a $100,000 trade? Obviously, you have to have enough in your account. You can't make 100,000 off of a 1,000 account. So, but I'm going through the tools that I use, so to speak, to generate, if we get a big trend coming, to generate a larger trade. So a lot of the time I toe dip into a trade. So I dip my toe in. So I'll start a position with in relative terms, a smaller position, and then I will build up as evidence grows of a given move. So right now I have started toe dipping into the long side of the euro. So a toe dip at the moment. And I'm now waiting to see whether we just crash down next week, in which case I get stopped out, or if we start to build. Maybe we carry on chopping around for a bit, but if we do start to build up, that's where it gets interesting. So, because if the euro starts to build up, then of course there's going to be lots of levels for it to come up to. Technically, there's going to be all sorts of levels. 110 becomes an important level again, because historically 110, the big round number, price often reacts to it. 112 will be interesting because that's the September highs. It doesn't matter. All of those levels, yes, price may react to, but ultimately I'm going to be looking at that 115 zone up there, where that quarterly 50 is. Now that quarterly 50 will move over time, and people say, what about swaps? I deal with swaps in that I'm in other positions as well, where I'm receiving swaps which offset the swaps that I'm paying on the likes of the euro. Another way that you can get around swaps, if you want to hold on to a position for multiple months, is to have a look at doing a like a quarterly rolling contract, or just a quarterly future with your CFD provider, because then you pay a wider spread up front, but you're not paying an overnight swap charge every night. So you pay a wider spread, but then you're not being charged after that. So there are ways of getting around it. Okay, so that's the level up there. So okay, so I've got about 10 lots in at the moment on my accounts. Okay, so 10 lots. So let's monetize this. Now, I often say to people, don't talk about the money, or just work out your trades, plan out, focus on the process and all that. The money take care of itself and all that. But now and again, we have to talk about the money here and there now and again. So, and this is how I can figure out, okay, what type of trade is this potentially going to be? So if I started out with 10 lots, if this plays itself out, then at what point do I start to add? Probably not until around the 110, the 110 area. So I'll let it come up for a bit. But first things first, 10 lots from, we'll call it 108, roughly. If the euro was to go from 108 to 115 over the months and months ahead, and it may not, but it doesn't matter. Don't fixate on what if it doesn't. It's just a trade. But if it does, then that is 700 pips, isn't it? So 10 lots at 700 pips is $70,000, because one lot is $10 a pip. So that works out $70,000. Okay. So if I did nothing but just sit on that trade, then it's $70,000 potential if it gets up there. Right. Okay. However, that's not what I do. Like I said, this is the toe dip, and then I look to add to the trade. Now, I don't know at what point I will add in. I've just nominated 110 there. I know 110 is a resistance level, but I'm not really fussed. If we're coming up to a resistance level, but I've got a firm commitment to a higher run, then I'm not really going to be too fussed about it. I know that it may well create a reaction, but that's just noise. So anyway, like I've said, I can't possibly know at what point I will add, because it does depend on the price action. If we had a really nice, big, strong expansion bar, then it's likely that's where I'd be looking to add in. What I can say is that ideally, by the time we get to around the 110 zone, based on the fact that if we come up, then I can move my stops up. I'm not going to go into the details of where my stops are and all of that. That's what I do in the trading room in my community in Charlie Burton Trading. And all of the details and all of that is what we do, and all the entries and stuff we do there. But so in an ideal situation, and it may not be ideal, but ideally, by the time we get to 110, I've got another 10 lots by the time we get up to there. So if I can get my stops up, if I can get to move my stops up, which would happen, then ideally another 10. Now, it might not be 10, it might be 8, it might be 6, but anyway, let's go with 10. So if I've got another 10 lots from, let's call it around 110, so that's still another 500 pips of potential there, which is another $50,000 on top there. So that takes us to a potential $120,000 trade. I'm talking about £100,000 minimum trade, so it needs to be a lot more than that. Then I know that 112 is an important level. I know that 112 is going to be an important level. Now, it might be that, and again, the intricacies of the trade would be that, yeah, it's likely I might bank a little bit of profit at a given level, especially at the 112 mark, depending on what price action's doing up there. But somewhere in, again, in this zone up here, maybe it's ahead of 112. I don't know yet. But somewhere in that zone, I would want to, even if I've banked and then it's pulled back a bit, so let's say price wiggles up to there, then it pulls back a bit, and then it starts coming up again. So by the time we get up to into that zone, I'd want to at least have another 5 lots. So let's say 5, it'd probably be more than that, but anyway, because it's another 200 pips higher, but anyway, let's just go with that. So another 5 lots for what, 300 pips, let's just go with that for now, is another $15,000. So you can see how gradually the trade builds. Now, one thing I haven't and it could well be that that's $15,000 to $30,000, because it might be that I've got another 10 on by then. So by that point, I'm 30 lots in, and so $15,000 to $30,000. So that puts me at 50, 70, plus another, probably more likely actually 30,000 by then. So by the time we get to 115, so that puts me on what, 150,000, which is around about £100,000. However, and of course I'd be trading in and around this, so there'll be little bits I'll bank, I'll hold on to a big core position, and then other bits I'll bank here and there. So the potential though is not just for 115. On that bigger picture, 120 is another level from which I could carry on with this mean reversion trade. So the scope then is that we come up to 115, and we do get, I would certainly be looking to use that as a target, a profit target. And depending on swap charges and all the other stuff that's going on, it could be I'm all out or only half out. But either way, I'm either all out or half out, and then I'll be looking to trade again for a run to 120. So let's just say there's another 500 pips of total. And let's say on that next 500 pips, I'm not in with 30 lots, but I'm still in with another, let's say 10 lots. Okay, so another 10 lots, 500, that gives me another 50,000 on there, comfortably putting me into the, what's that, 50, 100, 100, $200,000, so comfortably above £100,000. So what's that, 130, £140,000 trade. That's it, just mapping it out. As far as the numbers are concerned, that's what it is. Now, okay, so we know roughly the scope for a given trade as in monetary terms. It won't work out that way, even if the euro does push up, because a lot of factors come into play. What's the price action like? Whether I manage to get in on some of these levels. Might be some of my entries are better. It might be that I've actually got more lots in, or it might be that I've got slightly less lots in. The time, how long it takes, could be a factor that I'm sort of priced out if it takes too long. That I end up having to bank profits because of potential swaps and all of that as well. But nevertheless, that's the scope for it. So then you come back down to the nitty gritty of the trades, and ultimately we trade what's in front of us. So I'm putting this out there that I see this as a thematic trade to the upside at the moment. Now, the threats to the trade are obvious: trade wars, potentially, but they may we'll see. There's a lot going to be happening over the coming weeks ahead as tariffs are announced, and then counter tariffs, negotiations, all of that. So it could get a bit rough as far as the price action is concerned in the near term. But provided the euro overall holds up, even if it pulls back in the near term, unless it materially rolls over, probably a lot lower down, sub 105, then down there I'll revert to coming back to that monthly time frame and the scope for, oops, I need to reset the price. Okay, so if we rolled all the way back down but sub 105 again, well, okay, then we could well be that we're back on for the downside, in which case there's very clear identifiable targets down here around the 95 zone. So whatever way it plays out, there's some nice potential trades to be done. Then it's just down to the nitty gritty of the levels, the add-ins, where they actually come from. All of that is the nitty gritty, the detail. But mapping it out overall, big picture first of all, to say, right, okay, this is the big picture. These are the levels that I'm looking for, and then okay, then the nuances and the detail comes in on the day-to-day, week-to-week news, trading, price action as to the specific price entries that materialize. But there you go. I'm just mapping it out for you as to how I look at these big picture thematic trades and how they can end up accumulating into being quite sizable positions. Hopefully that's been of use for you today. I'll see you next week.